Hello everyone, welcome to BlockChain Daily News. Today is April 20th, 2024. I am digital anchor Amy. Today news headlines are: Halving does not reduce faith. What is the future of Bitcoin? If you don't believe me or don't get it, I don't have time to try to convince you, sorry. Satoshi Nakamoto, July 29, 2010. Why halving matters. The halving is the embodiment of Bitcoin's transparent, predictable, and deflationary monetary policy. The halving event reinforces Bitcoin's fundamental value proposition, including an open peer-to-peer network, a competitive mining industry, a distributed node network, and an active open-source development community. The halving itself is the scarcity mechanism that distinguishes Bitcoin from other assets. Bitcoin's immutable monetary policy coupled with a hard cap supply of 21 million is a revolutionary concept for macro assets. The transparency of Bitcoin's daily issuance schedule allows anyone in the world with a computer to verify for themselves that Bitcoin's issuance is proceeding as planned, without having to rely on or trust an intermediary. Additionally, every node in the Bitcoin network can confirm that the supply of the 21 million hard cap remains unchanged. The predictability and transparency of Bitcoin's fixed supply make this emerging asset a viable store of value alongside fiat currency. Unlike Bitcoin's fixed supply, fiat currencies are subject to the discretion of central banks, which have the power to adjust the money supply to manage economic stability or stimulate economic growth. This discretion results in an uncapped total supply of all fiat currencies and an unpredictable issuance schedule. The impact of this unpredictability is evident when evaluating the behavior of central banks. In response to the global economic turmoil caused by the COVID-19 pandemic, the Federal Reserve printed $5 billion out of thin air, more than doubling the central bank's balance sheet. These money printers, along with US government fiscal spending, helped ease the negative effects of lockdowns and COVID-19 measures by trickling through the US economy, stimulating the economy but ultimately leading to the worst inflation in decades. Even gold, known as the oldest scarce monetary asset, lacks a clear aggregate supply, and its output remains unpredictable, although it is affected by market dynamics rather than central bank policy decisions. Bitcoin's resilience during numerous bear markets highlights the market's renewed understanding of the value of Bitcoin as a decentralized macro asset that is characterized by transparency, predictability, and scarcity. Bitcoin's monetary policy is fixed, and every halving reaffirms its durability. Halvings will continue to happen, and stakeholders will never be bailed out by the system. The upcoming halving on April 20th, 2024 will reinforce these facts and will remind the market of Bitcoin's unique properties. The impact of halving on Bitcoin price. There is an ongoing debate about the impact each halving has on the price of Bitcoin. Historically, market participants view halvings as a bullish event for Bitcoin prices, while counterarguments argue that halvings will have a negligible impact on the price. Here's a breakdown of the bullish, bearish, and neutral views currently in the market regarding the halving's impact on BTC price. Bullish view: Bitcoin's block reward is reduced by 50%, making Bitcoin as an asset more scarce overall, while also reducing the absolute amount of selling by miners. Miners are considered consistent forced sellers of Bitcoin because these operations are extremely capital intensive and selling BTC is the main source of income for miners. Therefore, miners have always sold a portion of their block rewards into fiat currency to pay for operating expenses such as energy, labor, debt, and new machines. Many believe that after the Bitcoin halvings in November 2012, July 2016, and May 2020, the reduction in supply growth corresponded with the reduction in selling pressure from the mining community, leading to an increase in the value of Bitcoin. The same situation will occur after 4 halvings. Market participants who view the halving as a bullish price sentiment also use the widely circulated stock-to-flow model, which quantifies the price impact of Bitcoin's planned supply reduction. Proponents of this view often argue that investors do not properly factor in the halving in their current valuations of Bitcoin. Bearish view: with Bitcoin prices approaching all-time highs before the halving for the first time in history, market participants who view the halving as bearish on Bitcoin believe that the market has adapted to the previous 3 halvings and have reacted to this one. Events are priced. Before the previous 2 halvings, Bitcoin was down 42% plus from its previous all-time highs. In fact, at this stage of the Bitcoin supply schedule, the bull runs of 2017 and 2020 have not yet begun. The impact of each halving event on Bitcoin supply dynamics is bound to halve, and the impact decreases over time. For example, going from the issuance of 900 BTC per day to the issuance of 450 BTC per day is much smaller in absolute value than going from the issuance of 7,200 BTC per day to the issuance of 3,600 BTC per day, the first halving. Considering that Bitcoin's current daily issuance of 900 BTC is negligible compared to the asset's daily circulation, a new daily issuance of 450 BTC after the halving will have a minimal impact on Bitcoin's price. Additionally, bears believe that reduced miner revenue could lead to mining chaos and make the Bitcoin network less secure. Neutral view. The efficient market hypothesis holds that Bitcoin's past and future halvings are contrary to new information and cannot be considered supply shocks. Bitcoin's transparent and predictable issuance schedule should always be priced in by the market. A post-reduction bull run may have more to do with changes in demand than supply, and may even have more to do with global market liquidity, central bank interest rates, and other macro conditions. Historically, Bitcoin entered a bull market during the post-halving hype phase, which lasted from 0 to 600 days. After the first halving in 2012, Cycle 1, the Bitcoin price reached the cycle peak 367 days after the halving. During the second halving, Cycle 2, in 2016, post-halving price discovery was slower, reaching the top of the cycle 525 days after the halving. The third halving in 2020, Cycle 3, reached the top of the cycle 546 days after the halving. If history repeats itself, we are currently at the end of the accumulation phase and will slowly enter the hype phase sometime in 2024. For the first time ever, Bitcoin price surpassed its pre-halving all-time high. During the first two Bitcoin halvings in 2016 and 2020, Bitcoin prices fell by 42.5% and 52.8% respectively from the previous historical high. While Bitcoin's strong price action before the halving cycle can be seen as a prelude to the hype phase that the market usually sees after a halving cycle, the driving force behind this round of Bitcoin price increases is something that has not been seen in previous halving cycles. New developments are emerging, notably the launch of a spot-based Bitcoin ETF in the United States in January 2023. After the launch of the spot Bitcoin ETF, Bitcoin's fourth halving will occur in the context of a major change in the asset model. Since the launch of the ETF on January 10, 2024, the Bitcoin spot ETF has accumulated net inflows of more than $12.5 billion. Bitcoin has returned to the forefront of macro investor discussions and is now viewed as an important macro hedge asset along with gold and treasury bonds. The emergence of Bitcoin ETFs in the United States represents a dramatic shift that will upend conventional ideas about Bitcoin price cycles, assessments of holder behavior, and the dynamics of rotation within the cryptocurrency. Okay, let's end today's news headlines again with words from Bitcoin founder Satoshi Nakamoto. If you don't believe me or don't get it, I don't have time to try to convince you, sorry. Satoshi Nakamoto, July 29, 2010. I am a digital human made 100% by artificial intelligence AI. If you like my show, please like, subscribe, and forward my videos to your friends. AIGPU is AI technology that truly everyone can use. See you tomorrow.